This is the most important day trading video you'll ever watch. You have to stop obsessing about timing the absolute top or bottom of any play. I've been trading for 25 years. I've created over 50 millionaire students, and I'm telling you that it will never happen, okay? However, there are the signals that I use to know when to take full profits, partial profits, when to take partial losses, or even full losses. So I want you to learn these. So when do you take full profits on a trade? For me, understand, before I even risk my hard-earned money on any trade, I have a very specific profit goal. It's not an exact science, it's more of a range. Just like in Pirates of the Caribbean, you know, it's like,
the code is more what you'd call guidelines than actual rules.
that's the key. So whenever a stock that I'm in already has hit that goal or is close to that goal, I'm already thinking about taking profits. I don't sit around, I don't wait for the stock to reverse on me. Understand, we're trading the most volatile small caps and micro cap stocks. So when the play is going in your direction, fantastic. But for example, when I go into a trade, my goal is usually 4 or 5 times the profit versus the risk. What does that mean? If I'm buying a $4 stock and my goal is to make $1 a share, roughly 25%, if the stock goes up $1 a share and I'm up 25%, I'm gonna take full profits because that's my goal. If it doesn't go up $1 a share, maybe it goes up 80 cents or 90 cents a share, but it's having a little bit of difficulty getting to my exact goal, I'll still take full profits. Understand, I'm not trying to be perfect on any trade. You should not try to catch the exact bottom or the exact top. It's more of a guidelines, really. I'm gonna refer back to Pirates of the Caribbean because that is trading. If you can take the meat of the move. Sometimes on a fast-moving breaking news stock, I might even be more aggressive. Let's say there's a new AI runner, a new crypto treasury play. I might try to make 50% in a few minutes or a few hours. If it's not a great play, sometimes it's just a dip buy and a morning panic. If the stock is already down 20, 30% and my goal is to make 5 or 10%, I'll take that 5 or 10%. But when to take profits all starts before you even place your trade. And many people don't understand that. Many people are adjusting where their goals are based on their, action, based on their own greed. I want to take greed out of the equation. So the more you can plan your trade ahead of time, then let the trade play out. If it gets to your goal, you take those full profits. Not every trade has to be a home run, but when you plan the trade, go in with a specific profit goal and then try to take it anywhere around there. It's important to set realistic expectations. I usually try to take 10%, 20%, 30%, maximum 50%. I never try to make 100 or 200 or 300%, even if the stock is gonna go up 100%, because I like taking singles. I often say singles add up. That's how I've made millions over time. If you bet too big, if you get too greedy, if you overstay, the market will humble you. Aside from just taking full profits on a play, sometimes you want to take partial profits just to sell into strength, taking profits along the way. I think it's good to be conservative. I know, we're trading small caps, micro caps, very volatile stocks. Everyone wants to go for home runs. Everyone wants to hodl and, take these big gains. I don't think that's the right way to play it. I've seen too many people not take profits at all, not along the way, just overstaying, and then the stock collapses. It turns around very fast. And guess what? We live busy lives, so unless you're watching these stocks every single second, every single minute, the stocks can go against you. So I really like selling a third of my position or a quarter of my position or half my position just to size out and take profits along the way. Specifically on my over the weekend newsletter, I like to buy stocks on a Friday and sell on a Monday to ride the weekend hype. But at the same time, lately we've been seeing a lot of stocks spike into the close on a Friday afternoon or Friday after hours. And then when Monday comes, you don't see as much spike, and sometimes the stock even drops. So a lot of the time on my over the weekend newsletter, I've been adapting to the market and I'm selling Friday night, Friday afternoon, selling half my position, selling a third of my position. That's okay. It's good just to lock in profits, whether it's 5%, 10%, 20%. Maybe your goal is to make 20%, but the stock has some kind of resistance. I might reduce my goals just based on how the stock is acting. That's okay too. That's what trading is about. Never forget, 90% of traders lose. Why do they lose? They overstay, they get greedy, they blow up, they refuse to cut losses, but at the same time, they don't take profits into strength. There's a saying, you can never go broke taking profits. So I don't mind selling too soon, just locking in along the way. And in a perfect world, I sell half at a certain price, then it goes higher. I sell the other half even higher. But in the real world, sometimes I sell half, then the stock does nothing and comes back down, and I'm very glad I sold half into strength. If you've made it this far in the video, trust me, you're gonna wanna subscribe to this channel so that you don't miss my upcoming videos. I have a lot more detailed videos coming out, just how you can really take advantage of all this volatility right now. So like, subscribe, and comment. So rule number one for me is cut losses quickly.
Cut losses quickly, 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 cut losses quickly.
But sometimes you don't have to cut all your losses immediately. Let me explain. Sometimes I like to take partial losses just in case. When I'm unsure about a stock, if I have a goal and the stock isn't getting to that goal, sometimes I take a position because I think that a breakout is going to happen, but sometimes the stock doesn't break out right away and I want to give it time because I think it's going to break out. Sometimes I take partial losses just due to my own personal schedule. If you have a busy personal schedule, if you're always traveling like I am, it's very stressful when you take sizable positions. I want to take good trades. I want to be there for these trades, but sometimes I lose Wi-Fi. Sometimes I just can't focus entirely. So I like to take some small losses, take my position size down. It's not just about how much money you make or lose on a trade, it's also your position size too. So whether I'm up or down 1% or 2% or 3%, I might just reduce my position size just to reduce my risk. Also, taking partial losses, that's okay. Remember, rule number one is cut losses quickly.
Cut losses quickly, losses quickly, losses, cut losses quickly.
Take the risk down. If for whatever reason the stock does not do exactly what you want and it's hovering around a small loss, you're trying to be patient, take a little position loss, okay? It's okay to lose $50, $100, $500 and still keep a position just in case the stock breaks out later. If it's my over the weekend newsletter, sometimes I'll take a small loss into the close or after hours if the stock isn't acting right and I want to hold the position over the weekend to give it more time. Trading is all about adapting to the market and adapting to your own personality and your own personal schedule. So in an ideal world, I lose $50, $100, $200 on a small loss that I take, but then for whatever reason, the stock breaks out the next day or breaks out later in the day or bounces more, I still have a position and my gains later on can overwhelm the small losses that I take. That way it's less stressful. I still walk away with an overall profit. Small losses and small gains, they're scratches. They're not going to move your account very much, but they're also not going to kill your account. So lose the battle, win the war. Sometimes it's not just good enough to take partial losses, you have to cut the position. If the stock is breaking a key support level, if you're buying a stock for a breakout and the breakout just isn't happening, I have plenty of 1, 2, 3, 4, 5% losses. None of them are going to impact my trading account or my mental capital account either way, okay? It's even worse if a stock is not acting right, if it's not breaking out, if it's not holding a key support level, if let's say the market changes and for whatever reason the stock is scary and you're afraid of your size, you're afraid of what could happen, you cut that loss, you cut out that risk, and you're okay. Remember, 3 out of 4 stocks follow the market. So you might plan a perfect trade, you might be in for a perfect breakout in a hot sector with a news catalyst, everything is working out great. Then the Fed says something and the NASDAQ tanks 2%, that's going to impact your stock most likely. You have to be willing to cut it if the market changes, if the technicals don't agree. Or, maybe you're even busy. Maybe, let's say you have a headache on the day and your head is pounding and you're in the stock and you're like, I just can't even focus. Even if the stock acts perfectly, you're not in the prime mental condition to trade the stock. I know it's not fun to lose. I know it's frustrating, but you don't want to let a small mistake turn into a potential disaster. A lot of traders get stubborn and they have these unnecessary losses. It kills their account, it kills their momentum, and it kills their mental capital. When you have a big loss, then you're thinking that the market owes you. You think that you're off on your game. There's so many different consequences of taking a big loss, none of which are good. So your job is to avoid big losses at all costs. And I know what you're thinking. You might cut your losses, you take the loss, and then the stock does exactly what you want, and then you feel bad. I'm fine with that. I actually get encouraged when a stock does what I want, even though I've taken losses, because that means I was on the right track, but I've also properly protected my account. But conservative, disciplined trading is not fun. It helps you build your account though, you get rich over time, then you can use your money and have fun in real life. So knowing when to cut losses is one of the most important, if not the single most important trading lesson that I've learned in my 25 years of trading. And I cover all of the other top lessons in this video, so go check it out after this.